right, guys, here we are. This is section 2 of our investing notes, and you'll see these are review questions right here. And we keep moving on our notes. This is section 2. We have 3 sections, so wait until the third section before we submit our notes. So remember, any capital gains that we make, 2 ways to make money off of stocks: dividends and capital gains. Capital gains when we sell a stock for a profit or an investment for a profit. We are subject to capital gains tax. There's short-term and long-term. We're not going to get into that too much, but remember, we can avoid this capital gains tax. This is something that we can avoid if we put it into a Roth IRA. So that's something we talked about last unit. That is an awesome tax advantage. We can save paying so much on our capital gains, the money that we make through investing. The other way that we make money is through dividends. So all of these companies here, these are some major companies, big blue chip stocks that do pay out dividends. These dividends are paid out quarterly. You can pause the video, look up 3, and then see what their last dividend was, last quarterly dividend. Not yearly dividend, but last quarterly dividend. Quarterly dividends, so like Coca-Cola, I think had 46 cents per share. So if you had 2 shares, you got 92 cents, so on and so forth. I do encourage you use DRIP, Dividend Reinvestment Plan. That is going to be like that snowball rolling down the hill that we're always talking about with investing. It's going to give you more shares of stock, which leads to bigger dividends and more stock and more dividends and so on and so forth. If you're cashing these $46.08 dividends and spending them on stuff, then that is not the way that you want to go with the dividend stocks. Okay, so reinvest and keep on getting those dividends. Dividend stocks are awesome. I love them. Stockbrokers, financial advisors, this is somebody who is in charge of somebody else, managing somebody else's money. A fiduciary looks out for the best interest of their client. They are legally required to do so. If you do hire a financial advisor, I do encourage you to look into a fiduciary. They will make money off of managing your money. So you will pay them to roll over your 401k from a previous job. They will pick investments based on your risk levels and risk management styles. They will sell these stocks, bonds. They will make suggestions to when to diversify into other industries or when to kind of cut back on different risk and different stuff like that you meet with your financial advisor. And it's not just about investments. They also do insurance and look out for your children's 529 plans and 401ks and Roth IRAs and all sorts of different things like that. You can do it on your own as well. You don't pay that, you avoid that management fee, but again, you don't get that expertise. So good ones are great. Okay ones, they're okay. And there's bad ones out there too. It's just the way it is. So do your homework, make sure that you hire a good one. New York Stock Exchange, we talked about this, stock market basics. It's 9 to 4 Eastern Standard Time, close on weekends, close on holidays. NASDAQ's the electronic exchange. It's about 3,300 companies. New York Stock Exchange has about 2,800 or so. Moving on. New York Stock Exchange located on Walmart. There's an 8,000-pound brass bull in the financial district of New York City. They have that to represent what is called a bull market. Miami has the crypto bull, also representing a bull market. Bull market is upward trending market. The stock market is returning. We're getting capital gains. People want to invest, right? Bull. Bear market is bad. Prices are declining. People are losing money. People tend to sell during bear market and buy during bull market. It should actually be opposite. We should be buying low. We should be buying those stocks on a discount during a bear market. And if we do want to sell our investments, I'm a big advocate of investing for the long term. But if you do want to sell, bull market is the time to sell. Remember, bull and bear, those are the 2 sports teams in Chicago. There's an exchange in Chicago as well. That's how you're going to remember it. The 8,000-pound brass bull or the crypto bull, they're going to put those out to represent good markets. There shouldn't be a bear outside anything, so that would not be good. We don't want bear market. We want bull markets. Bull markets, people are making money, new businesses are opening. It's good times. That's just because I think it's funny. I only get like 2 people to laugh in each class, but that might only be because only 2 people understand it. It's a guy at an art gallery. How is that not funny? It's art. Dow Jones Industrial Average, this is a stock index snapshot of how the economy is performing at any given time. It's made up of the 30 largest publicly traded companies here in the United States. There's also the two other largest stock indexes, S&P 500, that tracks 500 of the largest companies on that, and NASDAQ tracks around 3,000, the NASDAQ composite. If you open your stock app on your iPhone, you will see these three indexes are the first three things that show up. So know these are stock indexes. Based on these stock indexes, you can tell how the overall market is kind of performing, so you don't have to look at individual stocks. There's the components of the Dow Jones Industrial Average. Pause the video, write 5 of these down that you like. Go ahead and put those in your notes. You'll notice there's a couple missing. They don't want to overemphasize the tech market, so companies like, gosh, I don't think Google is in there. Amazon is definitely not in there. Meta is not in there. Again, there's so many different companies with so many different things and different industries. So you have pharmaceuticals, you have adhesives, you have medical supplies and medical devices, appliances, investment companies, oil and gas, heavy machinery, aircrafts, credit, tech, retail. I saw Walmart in here. Procter & Gamble's consumer goods, Nike's retail and shoes, telecommunications. Here's retail with Walmart, another oil and gas. You guys get it. There's a lot. McDonald's is fast food, right? Lots of different industries. That is going to really give a good snapshot of all the industries. They don't want to overweigh it with one, especially the technology industry. All right, there you go. There's our quiz for day 2. So make sure you guys know these answers. And thanks. Have a good day.